Yo! Wanted to give you guys a bit of a trade recap and highlight some really important stuff from the live stream this morning. Thank you to you guys that joined for the marble races. That was awesome. It was actually a lot of fun. And congrats to the winners as well. Let's get into a couple of different things, because us as traders, it can get so easy to get caught up in the lower time frame movement, where we see major moves to the downside, major moves to the upside, and what ends up happening is you get these massive drops, right? That candle, that 5-minute candle, it's only about 41 points, but relative to this price action, that's actually quite substantial. And especially if you're following the 1 minute like myself, you see something like this go on. It's not intuitive. It's a muscle that you have to develop as traders, that when this happens, it has to actually achieve something, right? So it looks violent. It doesn't mean you go long on the close of any candle here. That's how you get clapped and wrecked. But when you see that kind of movement, the first thing that should come to mind is what should it achieve? What exactly is going on here, right? Otherwise, you get caught up in trying to hit this or hit this or hit this, right? Or maybe even going long here and you get wrecked, whatever. Or worse, you're actually shorting the movement back up and it just keeps going, right? So how do we stay out of trouble? So we use the 1 minute time frame just as a reminder. We use it for execution, but it's not our analysis. We do very, very little bit of analysis in terms of delivery, but we're really trying to trade what the 5 and the 15-minute chart is doing and executing our entries on the 1 minute time frame, right? And what that does is it shifts your focus from, okay, I want to go long because of 1 minute structure, even though the 15-minute is just a rocket ship, right? So if we look at our 15-minute time frame today, okay, like, did anything achieve from all that sell pressure in the morning? No. You got your 8:30 low here from news, and we didn't get a body closure underneath it, right? Now, we were looking bearish. Why? Because we actually got a body closure underneath this. This move took liquidity, closed underneath it. Sell pressure here, swept and failed right at the open, down we went. This is when you avoid going long, right? Your delivery is bearish. But this movement should have been violent. That's your second distribution. So when you get your flip, it's that trade back in, this movement here. This is first, usually breaks delivery or structure. The trade back in is the violent one that should go down. And if you don't get that, this is the result the vast majority of the time, right? So this movement achieved nothing on the 15-minute time frame. Okay. Our 15-minute, we use that for bias, right? We want to be long if the 15-minute remains bullish. And as soon as we closed above here, right, at 10:15 in the morning, as if we couldn't really tell from this accumulation here and then the manipulation and the higher time frame move that came in. But as soon as we closed up here, it was very, very dangerous to short at all, right? Now, on stream, we looked at this inversion after we took this high, this higher time frame high to the left, and that facilitated a movement. But the question in your mind should be, is this short a retracement, or is it going to break structure, right? We typically define any short positions in bullish movement on the 15 and higher time frames. We automatically determine that they're retracements, which means if your structure is doing this, any short here should just trade back into this. We don't go short here expecting structure to be broken. That doesn't make sense, right? So we expect this. Okay, so if you get that opportunity, cool. But as we talked about on stream, it's far higher probability to wait for that long to come out of structure. This trades back in. We then flip. Here's your long. Takes the high. Now, people on stream were talking about sell pressure coming in here. ES is trading higher. NQ is having difficulty. So they're talking about, well, maybe sell pressure is going to go in. Okay. But Let's look at this for a sec. So we have that higher time frame push, major decision made. Did we make a valid high? No. We actually tapped into an imbalance here. You see that imbalance, and that put it in a new high. We didn't get what we wanted here, so we avoided short. Good. That area ended up putting in a new high. Okay. Now we've got another valid high on the 5 minute. That actually created a valid high, trading back into this. That was that movement that we saw here, facilitating the movement back into this structural zone. And then it leaves. So now you got another protected low here. Well, look at that. No closure underneath it. Well, that's not good. Here's your unload, which fails to break structure. Trades back in, grinds, continues higher. Shocker. Who could have predicted this? Let's look at the 5. Is that a valid structural zone in the 5 minute time frame? Yes. You've got a valid structural candle, closure underneath it. That means that if we leave here, this is actually a 5 minute protected low as well. Spoiler alert, we broke CSD. That was a CSD here, but it achieved and failed an objective. That means we're not looking for shorts to do this, right? When you get your flip, if that flip occurs, but in doing so, that flip trades back down into your prior zone, it is not extremely high probability. We want that flip to occur here, get that trade back in, and then that short to trade back down for retracement. Or we're looking for that flip to occur in here to then run the high, and that's a continuation trade. We then leave. Guess what? Here's your structural zone. We just traded into it. What do we expect? Do we expect this high at 32? Yes. We're 3 points away. 3 points away. So this trades back down into our zone and our SNDR. And now look. Right? So we stab down. This is your liquidity. Did we get a closure above this? No. No flip. Looks good, but you're inside of a range. You're inside of a range. We then sweep down. This then took liquidity. Guess what? Broke above. Closure above. And we've now closed above this too. Guess where we tap back into? Your order block. There's your entry. So your long would have been right here. Come on. Oh my God. Your long would have been right there. I don't know how many of these there are. There we go. Finally, 607. Even a 10-point stop. Cool. And where are we looking? We're looking for 32.75. And that's immediate. That's immediate. That's beautiful. That's beautiful. That's a 2-to-1 trade that's going to come in here. Right? But if you're struggling, you have to wait for price to tip its hand and confirm. Confirm the movements. Confirm, confirm, confirm. We're not long in here. I mean, you could be, and then your stop's underneath. This very well could have swept again. Maybe it even takes these equal lows. Who knows? Whatever anecdotal reasons we got to the left. And if you're wrong, cool. You got like a 7-point stop in there. That's very, very aggressive. But if you're struggling, you should be looking for confirmation trades. Why we're looking for bullish PA. Right? And then we get involved and we allow price to do what it's currently doing. Target filled. Right? So stop fighting the trend. Stop getting in too early. Understand how price is moving. Watch your win rate and then your expectancy skyrocket. Start getting some payouts. Okay? Feel free to ask some questions in general chat. I'm going to post this to everybody. And we'll run it up tomorrow. Have a good rest of your day.